Hello and welcome to Blip, your daily news update for August 17th, 2025, right here from India. Blip, of course, stands for brief, small, but almost everything daily. Today, we're taking our signature deep dive into the past 24 hours, giving you that essential shortcut, to being truly well-informed. Everything from the buzzing markets in Mumbai to those high-stakes global summits. Let's get right into it.
Yeah, absolutely. We're going to navigate the most crucial developments shaping our world. Think economic shifts, corporate earnings, things that might touch your own portfolio, and then, well, the ever unpredictable world of geopolitics.
And we've got that final flourish, too, a significant scientific innovation that's literally reaching for the stars.
Exactly. It's a lot to cover, but we'll keep it quick, insightful, and hopefully even a little fun.
Okay, let's unpack this. And let's start with some genuinely good news from India's economic front. Good news first, right?
Always a good way to start.
The battle against inflation seems to be yielding, well, remarkable results. India's retail inflation eased to an 8-year low, just 1.55% in July.
That is a huge number. It really signals impressive stability.
But I have to ask, does an inflation rate this low also bring any challenges? Like, could it indicate weaker demand, maybe? Or even, a risk of deflation in some areas?
That's an excellent point, and it's something economists always watch. While it's fantastic for consumers, imagine your money stretching further. Extremely low inflation can sometimes be a double-edged sword.
How so?
Well, if it points to a significant sustained weakness on the demand side, it could signal an economic slowdown. That's the worry. However, in India's current context, this low figure, I think, mainly provides crucial breathing room. For consumers, yes, but also for policymakers.
Okay, so more flexibility.
Exactly. It encourages spending, investment, and importantly, it gives the central bank a considerable flexibility. They can support growth without worrying so much about price spirals. This kind of stability is, well, foundational.
Right. And speaking of good news for consumers, Prime Minister Modi, in his Independence Day address, proposed lowering the tax on daily use goods from 12% down to 5%.
That's a significant cut.
Yeah. We're talking everything from ACs and snacks to our cement potentially getting cheaper. This move, if it goes through, could have a revenue impact of about Rs 43,000 crore in FY26. So your next bag of chips might just be a little lighter on the wallet.
Definitely. And the economic ripple effect of a widespread tax cut like that, it's potentially quite large.
Explain that a bit.
That potential GST reduction on daily essentials is basically a direct boost to disposable income, particularly for the middle and lower income groups. You couple that with the easing inflation we just talked about, and it's clearly designed to put more money directly into consumers' hands.
Driving up demand.
That's the idea. Potentially driving up demand for goods and services right across the board.
Yeah.
So a classic strategy to stimulate the economy from the consumption side. Especially impactful for a huge consumer market like India.
And that revenue impact, the 43,000 crore.
It's significant, no doubt. But the government is clearly betting that the increased economic activity, maybe broader tax compliance too, will offset that, making it a net positive for growth in the long run.
Okay, interesting gamble. Now over to the stock markets. A quick glance shows, well, maybe a collective sigh of relief.
Maybe. A cautious one.
The BSE Sensex closed at 80,597.7. That's up 57.8 points, just plus 0.1%. And the Nifty 50 at 24,631.3, up 12.0 points, also plus 0.1%. This was as of August 15th.
Small gains, but context is key here.
Exactly. What's particularly interesting is that they both snapped a 6-week losing streak. Finally, some positive momentum, right?
Right. That slight rebound, especially after 6 straight weeks down, is a welcome sign. It suggests a potential shift in market sentiment. Maybe, just maybe, the worst of the selling pressure is over for now.
And for the average investor.
It offers a glimmer of hope, I'd say. And interestingly, look at the sectors. Consumer durables did particularly well. Both BSE and Nifty consumer durables indices were up 0.8%.
That aligns perfectly with the inflation and tax cut news, doesn't it?
It does. Those sectors directly benefit from increased consumer confidence and, well, potential purchasing power. However, there's always a however, isn't there?
Always. What is it this time?
India's long bond rally faltered. We saw that happen amidst rising fiscal risks and demand just ebbing away.
Fiscal risks meaning concerns about government spending and borrowing.
Precisely. Growing concerns there. And the bond market wobble is a critical signal. It suggests that while equities are finding their footing, maybe, these underlying concerns about government finances persist.
And the consequence?
It could lead to higher borrowing costs for the government down the line. That could potentially impact future public spending or even private investment. It's a key tension to keep an eye on.
Got it. Okay, let's dive into some specific corporate results that just dropped. Gives us a clearer picture of who's winning and losing. Vodafone Idea, for instance. Their consolidated loss widened, a staggering Rs 6,608 crore.
Oof, that's big.
And that's despite revenue actually rising 5%, and their ARPU average revenue per user hitting Rs 177. Their stock even hit a fresh 52-week low just before this. Not exactly ringing in the good times for them, is it?
No, unfortunately, Vodafone Idea's results really highlight the brutal, hyper-competitive nature of India's telecom sector. Even with some positive metrics like revenue growth and better ARPU, that widening loss points to huge operational costs.
Yeah.
And the sheer capital needed to compete.
Against the big guys.
Exactly, against entrenched larger players. It's a continuous battle for market share, for infrastructure. It puts immense pressure on their bottom line. It's just not enough to get more users or revenue if the costs of getting and keeping them are spiraling.
True. But it wasn't all red ink. Let's look at the brighter side. Nuvama Wealth saw their profit grow a healthy 19% to Rs 264 crore.
Nice. Solid growth there.
Inox Wind's profit more than doubled to Rs 97 crore.
Doubled. Wow. Renewable energy push paying off.
Seems like it. Ashok Leyland's net profit jumped 13% to Rs 594 crore. And Muthoot Finance, get this, saw a staggering 90% jump in profit.
90%. Okay, these are truly impressive numbers on this side of the ledger.
Yeah.
What's driving such different fortunes across these sectors?
It's quite the mix, isn't it?
It really is. These varying results paint a, let's say, nuanced and dynamic picture of the Indian corporate landscape. Nuvama Wealth. That robust growth reflects the increasing financialization of savings in India. Growing prosperity, more wealth management needed. Makes sense.
Inox Wind.
That doubling of profit clearly highlights the strong push towards renewable energy in India. Plus, probably favorable policy environments helping out.
Ashok Leyland.
Their jump points to recovery in commercial vehicles. That's often a good sign, a bellwether for industrial activity.
At the huge Muthoot Finance jump, 90%.
That suggests really strong demand for gold loans. Now, that could indicate an uptick in economic activity at the grassroots level, or perhaps a greater need for quick credit, maybe a bit of both. This diverse growth tells us that while some sectors face headwinds, others are really capitalizing on distinct market opportunities, adapting their strategies, and benefiting from specific demand trends.
Right. And the IPO buzz. Still very real, it seems. Regal Resources was subscribed an incredible 159 times.
159 times. It's huge appetite.
And Sowalia Food Products listed at a whopping 90% premium. Clearly, investors are hungry for new opportunities, maybe looking for the next big story outside the established giants.
Absolutely. These IPO successes, they demonstrate that despite the broader market ups and downs, there's still significant appetite for new, promising ventures, especially those seen as having strong growth potential or, unique market positions. The huge oversubscription, the premium listing, it shows smart money is actively seeking out and backing companies that might offer outsized returns. It reinforces confidence, at least in specific growth pockets of the Indian economy.
Okay, let's zoom out now to the global stage. Trade tensions, high-stakes meetings, they're dominating the headlines. The U.S.-India trade relationship is facing, significant turbulence, largely due to Donald Trump's threat of another 25% tariff on Indian goods exports.
Right, and he's specifically citing
India's continued purchase of Russian oil. This feels like a really delicate dance, doesn't it?
It absolutely is a delicate dance. India is trying to strike a very complex balance here between immediate energy needs and its long-term geopolitical alliances. On one hand, you have the IOC chairman explicitly stating no pause on Russian oil imports. Why? Compelling economic viability. Ural's crude discounts widened to $2.70.
Can't ignore those economics.
Exactly. India is prioritizing cost effectiveness, energy security, understandable for a rapidly growing economy. But on the other hand, look at Front Petroleum recently bought 10 million barrels of U.S. oil. That's a clear effort to diversify sources and maybe, mollify the U.S. a little.
So trying to play both sides.
Or rather, trying to navigate a world where energy security, economic pragmatism, and maintaining strategic autonomy are all sort of clashing. It's a tightrope walk. Any misstep could have significant trade or diplomatic repercussions.
And India isn't just reacting, though. It's actively engaging in trade diplomacy, pushing the UK, for instance, to speed up the free trade agreement approval that was signed back on July 24th.
Right, and that FTA is a big deal potentially.
Yeah, it aims to grant zero-duty access to Indian exports and potentially double bilateral trade to $120 billion by 2030. India is clearly employing what they call a four-strategy pillars approach to boost exports amid these U.S. tariff threats. How effective do you think this multi-pronged approach can be?
Well, this proactive approach with the UK and that broader four strategy pillars idea, which focuses on diversifying export markets, strengthening existing agreements, promoting high-growth sectors, and providing domestic support for exporters, it highlights India's strategic foresight. It's about hedging risks, creating new avenues for economic growth, reducing reliance on any single market, like the US perhaps,
Makes sense.
securing zero-duty access to a major economy like the UK. That would be a significant competitive advantage for Indian exporters, allowing them to expand reach and scale without facing those prohibitive tariffs. This diversification is just essential for sustained development in what's, let's face it, an increasingly uncertain global trade environment. It's a smart long-term play, cushioning potential shocks from other trade disputes.
Okay, now here's where it gets really interesting. Geopolitically speaking, the highly anticipated Trump-Putin-Alaska summit.
Ah, yes. The Alaska Summit.
Trump surprisingly claimed that Putin will make peace in Ukraine, adding another layer of intrigue. And because you truly can't make this stuff up, the Russian foreign minister apparently arrived in Alaska wearing a USSR t-shirt.
Slight chuckle.
Yeah.
You did see that. Wow. A statement piece, if ever there was one.
Right, and there's even an unverified rumor, unverified, that Trump is considering offering Russia access to Alaska's natural resources to broker peace. What could a summit like this, with all these elements, mean for global stability, and particularly for energy markets?
This summit, if those rumors hold any truth, it has profound implications. Any movement towards peace in Ukraine, however unlikely it seems sometimes, could ease global commodity prices. That could impact inflation, energy supply chains worldwide.
Which circles right back to India's oil purchases.
Exactly. It connects directly back to India's economically driven oil strategy. And that USSR t-shirt, whether it's a deliberate geopolitical statement, a kind of provocative jest, or just, I don't know, a nostalgic fashion choice, it speaks volumes about a segment of Russian political thinking, doesn't it? Seeking to reassert a historical identity, challenge the post-Cold War order.
It definitely sends a message.
It makes a peace deal in Ukraine far more complex than just resource allocation. It touches on fundamental perceptions of power, national identity. It's a bold signal that Moscow isn't just looking for an end to the conflict, perhaps, but maybe a re-envisioning of its role on the global stage. Heavy stuff.
Indeed. Okay, broadening our economic lens again. The World Bank's latest report. Not great news globally. It projects global growth weakening to just 2.3% in 2025.
Yeah, 2.3%, that's slow.
It marks the slowest pace of any decade since the 1960s, largely blamed on these escalating trade tensions we've been talking about. South Asia's growth, while better, is expected to moderate to 5.8% in 2025. What's the key takeaway here for economies like India?
These global growth projections are, well, a stark reminder of how deeply interconnected economies are. Trade tensions, as the World Bank highlights, aren't just headlines. They directly translate into slower economic activity worldwide. They disrupt supply chains, increase costs, create uncertainty for businesses. It all adds up.
And for South Asia, 5.8% still sounds decent, relatively.
It is robust compared to the global average, yes. But it's a moderation from previous forecasts. It means policymakers in the region will need to manage their fiscal and monetary policies really carefully to ensure sustained development, job creation, especially given these global headwinds. It just emphasizes the importance of domestic resilience and diversification, echoing India's strategy we just discussed, actually.
Right. And back in the U.S., inflation is still being a stubborn guest at the party. The July Producer Price Index, the PPI, surged 0.9% month-on-month.
Yeah, that was a big jump, highest since May 2022.
So it signals persistent inflation and potentially dims hopes for a large Federal Reserve rate cut anytime soon.
That's likely the read, yes. The PPI data is crucial because it measures inflation at the wholesale level, what producers are paying for inputs. A significant jump there often translates into higher consumer prices down the line as businesses pass those costs along.
So the Fed's hands are tied.
Not tied, but it reinforces the challenge. Balancing inflation control with economic growth. It suggests any aggressive rate cuts are probably off the table for the near future. They'll prioritize taming inflation first. And then it has implications globally, of course, for capital flows, interest rates, including in India. A higher-for-longer rate environment in the U.S. can make dollar assets more attractive, potentially putting pressure on emerging market currencies like the rupee. It's a global ripple effect.
Always connected. Okay, let's shift gears completely now for a glimpse into the future, focusing on one standout scientific and technological innovation. The space race just got even more crowded. Amazon has officially initiated the deployment of its Kuiper Internet satellite constellation.
Yes, the first batch is up.
First batch of 27 satellites just launched from Florida. This feels like a huge moment for global connectivity, doesn't it?
It is a monumental step, absolutely. Amazon's ambitious $10 billion project is now officially in the game, set to directly rival SpaceX's Starlink.
Yeah.
The goal: global broadband connectivity from low Earth orbit.
What's so fascinating here? The scale.
The sheer scale of the investment. Yes, $10 billion is serious money, but also the long-term vision. Ubiquitous internet access. It means reliable, high-speed internet, once limited to cities or places with lots of ground infrastructure, could become accessible in the most remote corners of the planet.
That could be transformative.
Fundamentally transformative. Think about how businesses operate, how education is delivered, how communities connect worldwide. This isn't just about faster internet for some. It's potentially about leveling the playing field for digital participation across the globe, opening up entirely new markets, new opportunities.
And the space race aspect.
It's not just for prestige anymore, clearly. It's very much for profit and arguably for global digital dominance.
Wow. Okay, so to recap, we've navigated India's robust economic maneuvering, falling inflation, consumer-friendly tax proposals, the mixed signals from the stock market and corporate giants. Then we zoomed out to the volatile global geopolitical landscape, trade tensions, crucial summits like the one in Alaska, persistent U.S. inflation. And finally, we had that thrilling look at technology pushing boundaries, with Amazon launching its Kuiper constellation into the literal space race. It's truly a dynamic world out there, isn't it?
It certainly is. Constant change, constant flux. And thinking about this, burgeoning private sector space race for global broadband, it raises a really important question for you, the listener, to consider.
Go on.
How will this escalating competition between giants like Amazon and SpaceX reshape not just internet access itself, but also geopolitical power dynamics and economic opportunities for nations, especially for developing economies like India? What new challenges and, yes, opportunities might arise as our skies become increasingly crowded with these privately owned internet constellations? And how might that influence everything from cybersecurity to international regulations, maybe even the digital divide itself?
Excellent food for thought. Lots to mull over there. Thank you for joining us on this deep dive. Keep exploring, keep questioning, and keep learning. We'll be back tomorrow with your next Daily Brief.